Yo, what's going on? This is beginner course part 2. Today we're going to be talking about candlesticks and time frames. You'll notice behind me I have the stock chart up of INUV. This was a stock I showed in a recent video where I talked about going up 80% on it, not being able to cash out and riding it all the way back down. Today is going to be my third chance to profit on it, so we're definitely going to cash out. I'm up about 50% on it. We're going to see what happens. But let's get into talking about candlesticks and time frames. We're looking at the two different types of candlesticks, a bearish and a bullish. The bullish usually signifies that the price is heading down, and it will have the opening price at the top and the closing price at the bottom of the body. The bullish is just the opposite. It signifies the price is going up, and the opening price is at the bottom of the body, and the closing price is at the top of the body. The other two pieces of data that we can acquire from each candlestick is a high and a low of the session, and a session refers to the time interval of each candle. Here we are looking at the Tesla chart in a 5-minute interval. You'll notice this big bullish candle right here. This is a good one to start learning from. The open would be down here at the bottom of its body around 7:16, and its close at the top of the body would be around 7:18. So most of the buying and price action occurred in between 7:16 and 7:18. We also have a low of that session, which is 7:10, and we have a high, which is about 7:21. So that's how you would read a candle on a 5-minute time interval. Now, if you were to go up in an interval, say to the 10-minute, what that does is it combines two 5-minute candles into one 10-minute candle. And if you were to go back down to the 5-minute, what it does is it splits that 10-minute candle up into two 5-minute candles. And that's how you can acquire a lot of data. You can go up through all these time frames and really get a feel for how people are buying and selling based off of candlesticks. You can even go as high as like a day time frame, and what this will do is it encompasses all the data of the day, the high, the low, and where most of the buying occurred and whether it was bullish or bearish. So each one of these candles now represents a full day. So this will help you to really, navigate a chart and find out when you should be buying and when you should be selling based off of the data you're getting from a candlestick. So real quick, exciting part to the day. It's 9:30, the market just opened, things are starting to get moving. One more point about candlesticks is you're going to hear a lot of people talk about candlestick patterns, like the hammer, the three wise men, the cup, the head and shoulders. You don't really need to memorize all of those things. You're not going to have time to be flipping through a book. It's more about, understanding candles and getting a general feel for them, understanding when something's looking bullish or looking bearish. If you can understand those, you can time your entries and time your exits better. If something's looking bearish and you've been riding a trend for a while, it might be time to get out before the price crashes down and sets off your stop loss, things like that. So just take all those things into consideration and study candlesticks, check out some patterns, watch the charts for a while, and always remember to keep skating and keep trading. We'll talk soon.